Welcome to the 21metrics podcast today. I have Jonas Savonen here with me. He's a quant and PhD researcher, and he came here to discuss markets with me. Maybe we are going to have a bit of a debate about where Bitcoin is headed to. But first, don't forget to check our partner Shift.ai and its new trading bot. I will add a link to the show notes. But Jonas, welcome to the show, and I have some slides here. You wanted to show us, and we're going to discuss Bitcoin markets, crypto markets, and like what is your approach? What is your like vantage point to the markets? How do you see markets developing in during the early spring of 25? So do you want to start with like some basics like quant macro approach to crypto?
Yeah, sure.
Yeah.
Yeah, sure. Because kind of like my background is kind of like building like quantitative models for commodities trading, where basically I studied my career and basically crypto is kind of like my hobby where I can have access to more data. And that's kind of like I feel that normally in crypto markets you could use far more data than we currently use. So my general like approach to look into this market why it should go like opposite direction than what market thinks is like to look in the traffic markets or what is the liquidity levels, because most cases like Bitcoin price is based on how much money is circulation that everybody is looking in the markets, right? Every week you basically can see a chart of mandatory aggregates, and that's kind of like why I believe that's kind of like the direction to go for. But the second point, what I want to later build the following slides make is also like the on-chain activity that's actually highly correlated with what happens in traditional market liquidity levels, and that's kind of like normally like indication if people have interest to crypto markets or not. And of course, like the tech sentiment, that's more like my research topic typically in academia is to look into how news can predict prices, and crypto markets we have pretty decent accessibility of news, like different websites like CoinDesk or some other providers. Some exchanges even have like some news flows that they provide, and it's kind of like why it's interesting to see the news flow as well, like in general, because it also gives a like raw feeling how people feel at the moment in the market. So we can probably scroll this next slide then.
Oh yeah, sure.
Yeah. And so basically, this is my like basically estimates of liquidity activity where I look into like a couple of hundred different indicators like interest rates or how much money is in capital markets available, like open interest of futures or some info like that basically approximates what's the liquidity levels in the market. And that's basically what we have seen is that the last bear market basically started during the period when we started to have a decline in the activity of increase of liquidity measured by 52-week chains. And now we basically have a similar pattern since end of 24, I mean. And that's kind of like why I feel like in the macroeconomic side, it looks more expensive dollar environment that's normally led to, let's say, lower risk asset prices, right? And just kind of like normally what you see in the 6-month lag, that this normally leads to lower stock prices as well. That's why we probably have seen already like some volatility with Trump administration where Nasdaq is going, and just kind of like in terms of traditional finance, it shows that there's more downside risks than we had like 1 year ago. Like for instance, if we would have followed the trend up quite nicely, then we pretty much been right boat. And currently, I just feel that the traditional finance markets kind of like start to show a little bit cracks or more like downside risks than we had 1 year ago, and that's kind of like embarrassing in that sense. And that's kind of like why I feel more like risk averse than 1 year ago at the moment in crypto markets as well.
Yes.
And
So yeah, I've been following your content on X. By the way, apologies, I said your first name wrong in the beginning. So
Juhani,
so
yes.
apologies for that. But anyways, like I've been following your like takes on X, and often it feels like you have this kind of like contra take to the market. So let's say now we are maybe expecting Bitcoin spot price to rise to maybe 150K we
Yeah,
are
actually.
or check sense. But your main thesis is that you're now seeing the global liquidity decreasing, and you will like you're
Expect
estimating.
downside, yes. And that's kind of
Yes.
like because like I think like most of markets normally follows M2 and M1 aggregates from Fed, and this is normally published in monthly intervals. And
Yeah.
I feel that like my estimate of weekly intervals is faster than M1,
Yeah.
and because I in my thesis in liquidity side is that the absolute level of liquidity doesn't matter so much, but rather the change of the how fast the liquidity is changing matters more. Like if there's a decline of increase in liquidity, this actually causes scarcity in dollars normally that we have seen in last
Yeah.
6 months that USD has strengthened a lot compared to other currencies.
Yeah.
And that's kind of like what I feel is could be like the main indication that there's less free money available, right? Because
Yeah.
we saw since 23, if you bought, let's say, stock of DeFi technologies around 20 cents or something like that in October 23,
Yeah.
you would have made like 20 times your investment in during the period when the liquidity went up.
Yeah.
And it's kind of like why I feel generally that normally like I try to normally find indicators that would be faster than market. And it's kind of like my thesis normally is that probably when people get super excited, then you shouldn't be excited yourself. That's kind of like my experience of carbon markets that people in my field were super excited in 22 in German market when German industry was producing a lot of stuff. And now when there are crises, then you should actually sold when everyone was excited. And that's kind of like, I feel it's good time to, let's say, reduce risk at least based on this liquidity indicator, because there seems to be some downside that markets are not pricing in. That's kind of like the same in tech stocks as well, that we have seen that Palantir has increased like 30% in last 3 weeks or something like that.
Yeah.
Which is kind of like a lot, right?
I would say
It's,
like I partially would agree with you based on like the data I follow. So I'm actually like I think we are going to like repeat last year's structure mainly because or we could repeat it that we now we had this spot price like hike, and I think like the summer season might be calmer as last year, and during many years we have seen that the sell in May effect has been played out in crypto markets. So I think like you could partially be right, and we could now we are in like at almost 100k, and we could see at least like a moderate correction downwards, and then like market cooling down for the summer.
yeah,
But I think
yes.
usually if you think about the seasonality of Bitcoin, we have usually seen like the Q4, the last quarter being the most
Bullish, yes. Yeah,
bullish
yeah.
season
Yeah, for
for.
sure, yeah.
So
And
yeah, yeah,
that also happens in stocks that you normally see August when you have, I don't know why it happens, but August you normally have some correction, like
yeah,
also in stocks and cryptos, and then you have Christmas kind of season, I guess, like people get excited, they want to get on holiday, and
yes,
then also
yeah,
I guess it's something to do with bonus season as well. People are, if they are like out of money in their P&L, then they probably take more risk
yes, yeah,
because there's more upside as well for them to,
yeah,
because you normally see it in any derivatives markets as well, that there's more
yeah.
interest to take additional risk for sure. Yeah,
Yeah, many reasons like psychological reasons, and but
yeah,
I'll
actually.
explain like the selling May phenomenon in crypto. So it's like at least in Europe we have like a holiday season,
Mhm.
not that much in US I would get, but it's somehow like and I said like people get their bonuses at the end of year, that
Yeah,
explains.
yeah, and it's also like there's like at least in Netherlands you actually get your holiday money in May.
Their
But
money.
that's,
Yes,
yeah,
yeah,
yeah. So I wouldn't be surprised if some people would throw their money in crypto market in May or
yeah.
stocks in
Yeah.
Netherlands.
And some might have like a longer holiday season during the summer. So is it like some people might want to cash out before vacation, or who knows? But like many possibilities. But yeah,
Yeah, I guess it's more a liquidity thing, right? Like because if people are like fully invest in stocks and crypto during the couple of months and then they have to cash out, that's like similar in Christmas. I think that we saw like small correction before end of Christmas and New Year, that
yeah,
some people needed probably some cash somewhere, and then it kind of like balances out the supply and demand, and then we had a little bit pick up again, right? That's kind of like
yeah,
what we have seen the like massive increase and then like drop in also in stock of MSTR and the other stocks as well.
yeah. Also, like
You
back
just
in 21, we saw this same
yeah.
trend. As you can see there, like the double top of 21.
Yeah,
So
actually.
yeah,
Yeah, this kind of like sweats me most actually that it looks so
yeah,
similar.
yeah, it seems to repeat a lot. And then we had this peak like during the February, March, and then actually the market corrected deeply during the summer. It went to 27K, I remember, and then it like climbed back again in November. So in 21 again, like this same structure repeated. So like up during the spring, and then sell in May, and then
Yeah, exactly.
then
Yeah,
bullish Q4. So yeah, it really seems to be the main theme here.
yeah.
But do you want to skip to next slide? Slide
Yeah,
five.
actually, this is kind of like the same thing, but with on-chain data, actually from
Yeah.
blockchain.info website, where I basically just aggregate them everything by using machine learning to find the general path where the liquidity is going, based
Yeah.
on separating like the variables that are related to like the mining itself, but also like what happens in the blocks itself when blocks are produced in Bitcoin.
Mm.
And these like three different like factors. I don't remember like the third one was, but it's basically related to the mining revenue, like the activity itself in the block, and also like the calculations what happened there. So you have like three different factors that then up generate one single variable. And
Mm.
this actually has like this like highly correlated to the previous chart actually, which is kind of like what I find really interesting, that these kind of like Bitcoin on-chain activity is highly correlated with global liquidity cycle in dollars at least,
Yeah.
where where we basically start to see that this might be also indication that market could correct, because normally we see that Bitcoin goes down with the lower on-chain activity, and that's kind of like why I see it in terms of like we could call it like physics of blockchain, that if there's less people mining Bitcoin and there's less interest around to creating new accounts,
Mm.
there might be also lower demand for the asset as a commodity, or how we want to call it. And
Yeah.
that's kind of like why I feel that current prices are more like speculative, not like bubble, but high valuations, just because the US policy discussions at the moment, because we have seen in the last 2 weeks that sometimes if there's like some new executive order for Trump, then we see a solid increase of prices, and then the prices correct back again. Like we have seen days where price can increase 3-4% 1 hour and then collapse back in the end of trading day.
Yeah.
That's why I see that there's a lot of speculative behavior, or like it's kind of like bubbly. I think it remembers me a lot like when I was in carbon markets, where we had like 22 was the most bullish year, when everyone believed that every green stuff will be valued at billions next year, and people just bought it a lot. And it's kind of like feels a little bit in crypto market the same thing. If we look the valuations of Fartcoin or any other like these super memeistic coins, right?
Mm.
And
Yeah.
that's why I feel together with the liquidity indicator and the on-chain activity, that there's some corrections should probably happen in more like medium term. It might be that price goes still higher, or like if people still like continue to believe the FOMO and continue the buying, but if the buying stops, then it starts to be a question when people start to sell part of their portfolio, at least because they are, if you look like other stocks related to Bitcoin, like MSTR, Mara, and they have a lot of exposure via their convertible bonds, right? And these
Yeah.
normally have clauses that bondholders might get stocks instead of being paid in euros or dollars. This that might cause like some reaction in those stocks and pressure Bitcoin prices as well, because then they might be forced to sell part of their assets because
Yeah.
the clauses of the bond contracts. And it's kind of like why I see a lot of risks in crypto stocks. That's why I sold my crypto stocks a couple of weeks ago, because I just wanted to be lower risk, kind of like to feel that there's enough upside for me to be there
Yeah.
in the like those mining stocks or asset managers as well.
Yeah.
Yeah,
So,
it's kind of
yeah.
like,
Yeah. I
because I
guess
kind of like
you,
yeah,
you sold your stock, so you're like yeah. So
yeah, I
interesting.
kind of like, yeah, I kind of like more like reduce like exposure, because that's kind of like just want to see how this plays out, because it's kind of like for me it's kind of like feels better that when the liquidity is decreasing and dollar is strengthening together with lower on-chain activity, it's kind of like probably on the market where I shouldn't be super exposed.
Yeah, yeah.
Yeah.
It might be like if you think about politics for a while. If you think about like Trump's government, he might want to see a strong dollar for a while. When he's having these like negotiations with other countries, but eventually, I think he says he wants lower rates and everything. And also like his success will be somewhat measured in like the
The
stock
stock
market
market, yes, stock market of
in a way.
cryptos as well. Yeah, yeah.
Also nowadays crypto performance, maybe because Bitcoin is such a big thing. I think one of the drivers behind Trump's victory even. But I think like if you think his like 4-year term, it might be okay to see the market tank very very early during his term, and then
Yeah, this is like strategy for sure.
yeah, then
Like,
go up later.
uh,
But I think the worst thing you don't want to see is that the market would tank late in your
yeah,
term,
yeah, yeah. That's
like
kind of yeah,
elections.
yeah. I think that's like bad for probably GD Vance if the market would tank in the end
Yes.
because I think he is pretty much likely the next candidate for presidency.
Yeah.
that's
Yeah.
that's my raw like feeling of the U.S. politics at
It,
least.
it's
And
possible.
and and it's kind of like also U.S. interest to have correction. Like if they want to start this wealth fund, then
Yeah.
it's actually better for them that they can get a lot of dollars cheaper at lower rates, right?
Yeah.
But
Yeah.
but
Yeah.
I don't think like the rates can go lower with the tariff policy because the tariffs tend to increase commodity prices, and that's kind of like why I'm bullish on gold and that kind of
Yeah.
metal products where there's like limited amount of them available, right?
Yeah.
Because I think like Bitcoin is a bit like hedge against quantitative easing, and that's how it was kind of like developed, right? Like if you typically open the basic paper, like at least during my high school time when I heard about Bitcoin first time, it was more like libertarian politics thing, like in youth politics where I was active actually. And that's kind
Yeah.
of like why I feel like Bitcoin is the best asset to buy when Fed becomes really less hawkish and more like open for easing policies.
Yeah. That's right. And like yeah, we have like many theories that Bitcoin is this like global liquidity proxy or like
Yeah, it's
yeah,
pretty much actually. I think so
yeah,
because the correlation is like pretty high in monthly or weekly level. Like if you that's why most people use the M1 or M2 because they just believe the liquidity in current setting it will always go up, right? Because fiat system doesn't work if it doesn't expand the liquidity.
yeah, for sure. And about Trump's government, like voters usually have a short memory in a way. So we
Yeah, yeah, that's kind of like well, that's the interesting thing. Yeah,
we're almost like 4 years away until next elections, and now it would be like relatively okay to tank the market a bit or for
yeah, yeah.
a market
I,
correction. But yeah, as said, like you don't want to that happening during the late term. But now it would be okay. So
yeah, actually.
that's like support this correction thesis. Yeah, I agree. But we can check the next slide, which is market sentiment, and you want to say
Yeah,
that.
actually. So I basically use the news here. So basically, I use like different news sources. I have like 4 or 5 news sites that I currently have. But of course, I could use more. But normally, I try to focus on main ones like CoinDesk or something similar.
Yeah,
Because I feel that because that's kind of like where I do most of my academic research to predict inflation by German news, like economic news. If people are feeling that price would go up, or there's news about, let's say, news about price of probably coffee or something like that, something typical for Finland or some other countries where people are now saying that it's extremely expensive over the COVID times. And in crypto space, that the main thing focus would be like if people publish a news about, let's say, Bitcoin price was this today, and then they write if market was excited or what happened in the market in general, right? Like if you have solid outlooks of daily updates, then I can generate the variables out of it
yeah,
using machine learning and different algorithms that I develop in the academic side of my life.
mm,
And because I feel like news is kind of like the best proxy of the market sentiment because it's kind of like you can get it every day, right? You can read the latest news, and it's kind of like gives you the direction where markets are going, and that's kind of like which makes me in short term really worried because we have seen since the peak of like this last pop up like that we had a couple of weeks ago thereafter the sentiment has been sinking quite hard, and we have also
Yeah.
seen the price action being downside pressure.
Yeah.
And it's kind of like the main thing why I'm gonna like feel like bearish in short term at least. And just
Yeah.
because we saw this also in last summer that we had probably not Bitcoin didn't increase a lot in summer, but if we looked like more like meme like coins or some other types of DeFi related coins, for instance, there we had like massive bull run in those in during the midsummer, and that's where
Yeah.
the sentiment, with sentiment, they actually went correlate quite strongly with that bull run as well.
That's right.
Whereas
Yeah.
Bitcoin was kind of like flattish or had this like flat area like that it normally has, right? Because Bitcoin normally has flat areas and then it normally increases from there by jumps, and that's kind of like
Yeah.
typically how I mathematically see like how crypto markets work, that you have these weird stable areas and then there's increases, and that's kind of like currently together with those liquidity and on-chain activity, I see more bearishness actually.
Yeah. Now that you mentioned like altcoins and meme coins, like uh, I think like this year or like from 25 forwards, we're going to have a different situation that like people are awaiting a new alt season and are always looking forward it to. And people assume that it will like play out as it has been playing out during the past years, but the truth is that as this chart shows, we are now having like almost 38 million altcoins. Most of the new ones have been built on Solana, during the previous cycles, we had maybe some hundreds of altcoins in 13, 14, and in 17, 18 we had like a couple of thousand tokens. But this like if you really think about this dynamic, which is now playing out, is that you have like a huge supply of new tokens, like an overwhelming supply of tokens,
Mhm.
and of course like demand has increased. Yes, the new investors, like Trump token had like 50% new investors, which came outside of crypto, just wanting to invest in the presidential coin. But like
Yeah,
how do you see this playing out? Because maybe there won't be an alt season like before. Maybe this time is different. So we can see Bitcoin, which is like this sovereign asset now with Bitcoin's dominance over 60%. But then about altcoins, I think you need to be like very selective, which ones you actually invest in. Or then there's this like very quick meme coin market going on, as you said, that there's like insider information about meme coins, and you have like a very short like time window to invest in them. But it's whatever it is, it's definitely changing. And one of the main themes also is that Ethereum is kind of like dying, and now like Solana is replacing that. So
yeah,
like
it's kind of like Solana, I think so. At least
yeah,
like in the activity levels, right? But I
yeah,
guess like I guess like people could have just a more like fundamental approach to it, like look into like coins that actually generate added value for, let's say, businesses that are related to crypto.
yeah,
Like because I think like Solana is just way more like ecosystem that is more interesting for many applications, and
yeah,
it's basically have been driving it up, right? Like
yeah,
if you look like companies that operate in Switzerland or Caymans or anywhere, which are the main hubs, so like the stocks
yeah,
that you find in stock market, then I think Solana has been the main coin outside Bitcoin actually because you from Canada you can find companies that basically are buying access to Solana as well.
yes, yeah, yeah,
Yeah, and you still have like not like miners, but those people who basically stake these assets in those different chains, and that's kind of like where I've seen like most growth at least.
yeah, yeah, for sure.
Yeah,
And
yeah. I guess it becomes just more like a fundamental case investing where you try to find ecosystems that should have a bright future, right? That's
yeah,
probably was the main driver why people would buy Solana in last 2 years.
yeah, yeah, for sure. And if you look at on X, there are so many shorts for Ethereum. So it's like Ethereum short positions are
Yeah, I think
plus
it's like
40,
I think it's like
40.
maximized recently, at least the
Yes.
CFTC report,
Yeah,
like what
yeah,
I've been reading. Yeah.
yeah, really. So it's I'm sharing my screen right now. So
Yeah.
short positioning in Ethereum is now up plus 40% in 1 week, and plus 500% since November 24. And Wall Street hedge funds are shorting Ethereum, and many reasons behind it. But Ethereum has been one of the losers during the recent years, and I think there's also lack of narrative, lack of proper investment narrative for Ethereum, and Bitcoin is this digital gold, hard cap money, and then Solana is messing up. Messing up the scene at the same time, and gaining Ethereum's market share. So, but it's
Yeah, I think so. Yeah, because I remember that some banks were planning to use Solana for some applications instead of, because 3 or 4 years ago, it was mostly Ethereum that some banks were testing in Switzerland, for instance. But now it's moving to Solana, I think, and then there's some cases for Avalanche, for instance. There's at least experience on during my study time when I did some courses from the blockchain center in Frankfurt School of Finance, actually.
Yeah, and that's Fred recently said that people want the ease of use, basically. So if you think about Ethereum, it's expensive if you want to launch your token or meme. Solana is very very cheap compared to Ethereum, and it's fast. It's not decentralized as we know, but Ethereum it's low, it's expensive, and then you need to use some L2. You probably you would first buy Ethereum, and then you would need to switch to Polygon and whatever. But it's just maybe too much hassle, and most of these coin guys just want to launch their meme coin ASAP and just go with that, and
actually it's kind of at least that's kind of what has been happening with those new tokens and new kind of new coins that has been going viral in USA, and that's why they use Solana, because it's only single website where you write the name and then press launch, basically. It's kind of pretty much probably one of the key drivers.
It's obvious, and I think Solana attracts a lot of new guys to the scene, new guys who are coming outside of crypto, and they just want fast things and fast launches, and as I discussed, these time windows are so much smaller nowadays. So they're not waiting for 3 years to another cycle. They just want to launch now their meme coin and then pump it and whatever, and then make a new one. It's like this new culture in a way. But let's look at spot price for a while, and we are now at 97k. So you believe we are going to see correction, as you said, within a couple of weeks maybe? How low would you see it going, 80k or 70k, or how low would it dip? And
I would expect something between 65 and 75 if really stock market starts to tank as well. It's just really question of if it's only cryptos that correct, let's say 10k or something, or if it's more systematic, how it looks in the market liquidity side.
Yeah,
because currently the inflation is picking up, at least my experience. Kind of what I do in my academic work is kind of look food prices and commodities. We have seen coffee reaching new all-time highs, and cocoa beans and many other commodities like beef as well, live cattle and pigs as well. And just kind of for me indication that there might be longer higher rates actually in following months. And that's kind of just a question of if the system can be able to survive in USA with higher rates, right? Because if you have mortgage rate of 7 or 8%, that's not really sustainable in the system where people use a lot of credit cards, right? Because the credit card debt is kind of really massive in USA.
Yeah.
My question is if labor market starts to slow down, last week we had some reports, then if people start to run out of money, then probably cryptos and stocks are the first thing to be sold when you need extra cash.
Yeah.
And that can cause, let's say, significant decline in share prices and crypto prices as well. And then I would expect correction in stocks probably 10-15%, and then in crypto it could be, I guess 2 times is not so bad. Expecting 2x what happens in Nasdaq for Bitcoin, 30% decline would be really reasonable if we really start to see like weakening of economy, which normally happens with this lower liquidity spaces, right?
Yeah, I would say like partially agree with your thesis. I'm also expecting correction, but I think it might happen a bit later, as like the selling May effect has been so strong in crypto markets. I think it might happen in March or April, but it
Yeah,
depends
I think so.
on the stock market and like tech stocks, Nasdaq, and nowadays Bitcoin is pretty correlated with Nasdaq and S&P
Yeah,
500.
at least like semiconductors are like that's
Yeah,
kind of like for me at least like Nvidia is like Bitcoin stock, like because I've always wondered who buys actually those expensive chips, because I kind of like feel that must be like Mara and the other mining
yeah,
companies that are major buyers, because normally Nvidia is like correlates quite strongly with the news sentiment of crypto as well, because a lot of actually crypto news sites publish news about Nvidia, and it's kind of like little bit feels that it's kind of like correlated as well.
yeah. But I
But
think it's pretty likely that we are going to have like a calmer summer,
yeah,
and then yeah, like
yeah, yeah,
a correction before summer, then maybe sideways during the summer, maybe 60 to 80K, something like that, and then up again by the Q4. But
yeah,
still, like,
I
there's
think
like
like yeah,
yeah,
because like by the Q4 it might be that Fed cuts the rates if stock
yes,
market tanks and labor numbers start to become bad. That's kind of
yeah,
like what I would expect. That normally those bear markets takes like a couple of 2-3 months when the stock market corrects 15%, I guess,
yeah,
and then we would start to see increasing liquidity. And that's kind of like what I'm waiting for. That once I see that liquidity start to increase and also the on-chain actually looks better, then I kind of like feel more to have more weight again, to go more like 50% to mining companies again, like that I did like last year.
yeah. But still, like before the May and selling May effect, we still have room for it. It's a slim chance, but we might still see like the spot to go to maybe
Mhm.
130K. It's I don't know how probable that is, but we might even
Yeah,
see
but there's
this kind
still
of like
like pressure, I think so. Yeah,
bull
because
trap, bull trap like during March or April, and then down again. I don't know, but you're right. I'm also expecting to be able to buy cheaper bitcoins during the summer season. It's very likely because it has happened like so many times, and it will. And
yeah,
it's
especially
coming.
like
Are
midsummer, like before
expecting.
August, right? That's gonna
Yeah,
like always been the cheap time to buy stocks.
yeah,
Also, like Nvidia, or if you bought then you're like pretty happy now, I guess. Like
yeah,
that's kind of like in any risk assets normally. But it's kind of like the main question is like how long the retail continues to buy the
yeah,
dips, because
yeah,
that has been like the main thing in last 3-4 weeks. Because
yeah,
sometimes I felt like that there's no bottom on the market, and then people buy that dip and it goes up 10,000 euros or dollars again.
yeah,
That's kind of like pretty much been the dynamic recently when the MSTR also like reduced the buying, I think so.
yeah.
That's kind of like the question of who is the buyers, and is it like the
Right.
retail that keeps the market float? Because we see that in the CFTC reports normally that a lot of institutionals are like shorting those futures, right?
Yes.
Like the from the Ether, for instance, and stocks as well, we have seen like some of the variables that I include the liquidities, like the leverage, like from the CFTC report.
Yeah.
And I basically see that there's less open interest in tech indices and also like some commodity indices as well, and that kind of like indicates that there's less professional money tied to like long positions in many risk assets, and that's kind of like also would speak for more like lower prices.
Yeah, you're right
But
that MSTR sailor they're usually like pro cyclical. So if when you see like MSTR stop buying, you could expect like Bitcoin going down. And if when you look at the long term chart of their like Bitcoin accumulation, you can see that they're buying less when the spot price is going down or going low, and buying more when it's going up. So that's like one indicator, and I'm sure like MSTR has like sophisticated models to decide when to buy and when not to buy. So that's one
yeah,
indicator.
actually, but it's
But
kind
yeah,
of like also there's also like opportunity for equity traders, right? Because MSCR gives you basically super convex payoffs to Bitcoin. That's kind of like why I like the stock actually quite a lot, because
yeah,
even though you don't plan to keep Bitcoin so much in your portfolio, you can still have like access to this convexity, like in those bull market events, right? That,
yeah,
like the presidential elections and those kind of events were quite nice in that regard.
Yeah. Many guys like Emma's tier. I also have quite a lot of friends who bought it, and they might not own Bitcoin, but they
Actually,
want to have this leverage play, and for some reason they want this. And you could argue that Emma's tier is an unofficial Bitcoin ETF, or how would you want to describe it, anyways? But yeah, it's popular.
I think it behaves a bit like a call option, like in the money call option on Bitcoin. That's kind of like at least my feeling of looking into compared to like stocks, like options on Nvidia. They're gonna like behave very similarly.
Yes, yeah, it's popular. But yeah, this chart is about power law, and you can see like this our model. So power law fit is around 80k, 0.6k. So this is kind of like the support for Bitcoin at the moment, and I'd also see like a fair price for Bitcoin in a way. So Bitcoin.
Yeah, it's kind of like the general estimate what you expect in the long run the price to be.
Yes, and also like it's power law is not. While like it's not promising like astonishing returns to Bitcoin. It's almost like following the law of diminishing returns in a way, and it's kind of like price will go up, but it's not going to be like 13-14 cycle or 17.
No, definitely
But it went like 20x, from 16 to 7. And
it gives like nice fit if you use like lock prices for sure.
Yeah. So it will like be like 6 figures, but like for example, if you compare it to this stock to flow model, but stock to flow, Bitcoin should be now around like 400k or something like that. It's not like reasonable. But this
I don't think so.
This makes a lot of sense.
I think so. It also like works for stocks actually. That's kind of like what I have experienced as well.
Yeah. So a global macro investor has this like Bitcoin cycle top finder. I don't know, like do you like this, or by this model, Bitcoin would still have a lot of upsides ahead. But again, you could say that like even with the technical correction possibly happening this spring, it's still true. So these are like very very long term model. It goes back to 2011. So of course it's true in a way. It doesn't take into account the technical correction to 70k or whatever. So
actually,
it's not fraud in a way.
Yeah, but I think it's kind of like built for cases where because we basically see in the history that there's some smaller corrections over the way. Because if you drop from 100k to 70k, it's not like extreme correction like we had in 22, for instance. It would be like minor one. So it could be like it goes down a bit and then corrects to higher levels, like when it starts to pick up again. Because I think like like it might be also like that the market has become more synchronized with the general liquidity cycle, because if it becomes more of the, let's say, quantitative easing trade, then people would trade it around quantitative easing, right? The larger institution, for instance, when become more institutionalized. So it's kind of like just depends on the interval of people are trading. Are they buying the peak or tops? That's kind of like, because like the idea of using liquidity is kind of very similar what they do in global macro investors as well. But they normally use more like long-term variables like monetary aggregates and that kind of data that normally doesn't peak so fast, right? But if you use like more like short-term variables like the derivative market activity, then we have more downside pressures as well, more frequently. So it might be like medium correction between the cycles, like between 2017 and 21, right? There was some minor correction and thereafter it picked up. So it would be like more like that kind of case, I think, but I speak most of people who are active in the space, they still feel that this is like just the beginning of the cycle. It might be, but there might be a correction between there. It's more like the bigger risk if you have like altcoins or like these stocks, because in this, if you trade the miners, they normally correct like 30-40% in 1 month, and then you basically want to be out of market when that happens. And because that's where I see most of correction in my correction, but also correlation to my models is like when I look Mara, for instance, it has pretty significantly correlated all the history, and now we have been like this declining period when we have seen that Mara went to $22, and now it's trading below 20.
Yeah.
And
Also,
it's
like,
kind of like, yeah.
yeah, I agree. Also, like, think about like personal exposure that if Bitcoin would correct 20% downwards, and if you calculate like all the fees and all the risks involved, that I was thinking that is it worth it, like selling your Bitcoin stack, expecting or maybe you could correct even 30%, because usually it will bounce up again, and then if I time it wrong, because it's pretty hard to time it perfectly, then I could miss like the 150k or whatever 170k at the Q4, possibly. So it's like if you just like can handle it, like hodling, if you have a bigger stack, hodling Bitcoin is not a bad idea, because then yeah, it's not yeah, I'm like trading sometimes, but it's not that easy to time.
Like the timing is more like that one has to have those leading indicators to have more edge, I would say.
Yeah.
Because otherwise it's better that you just hodl. It's kind of like same thing with stock market, right? That most people should just throw their 300 euros a month and just forget it and just finance the pension thereafter later on it. But I think like more like where there's more upside is like the mining stocks, that when you see that they tank 40%, then you should instantly buy them, right? That's kind of like what I did like whole last year, that when I saw like that they tank like 30% in one day, then you would buy them and then they correct back 20%, right?
Yeah, it's a good trade, yeah. Or then like, it's just like it's good to have like liquid cash, so keep your Bitcoin stack and wait for the correction, and then buy the dip again, and kind of like accumulate more Bitcoin.
It's good to also like just reduce, right? Because then you reduce part of your portfolio, then you don't go down with 40%. It might be that you also need cash during those low liquidity cycles, because labor market is also more strict in the sense that there's less supply available, and that's kind of probably might lead to lower Bitcoin prices as well, because people have to liquidate some of the assets to live next 6 months instead of having constant cash flow, right?
Yeah, during the years, like I have to say that like one of the best decisions I've made has been to keep like at least part of the stack in like cold storage. So it's hard for me to sell, and it's kind of like it's like this bulletproof solution. So then if I'm trying to panic, I'm not. It's hard for me to sell it, and like if you look years back, like 5 years back, or it's still like being going up, like basically forever. So it's good to have like at least like a couple of Bitcoins in cold storage, and stuff, like keep them there, because you never know like what is going to happen, and there's still like the upside is pretty big, and so
so long as the liquidity continues to increase, right? That's
kind of like hedging yourself. So I'm not doing like stupid decisions. So I guess you should like you probably also have like multiple portfolios. So you have
actually you normally have like the systematic one, and then you have the one that's like pension money where you throw the money. Because also like in a lot of countries like Netherlands or Germany, you normally have the private pension account, or how we want to call it, where company pays part of the money, and then you cannot really touch it. And that's kind of like the main benefit, I would say, if the pension funds start to also have crypto assets, because then you are unable to touch it actually. But you normally just want to separate the average saving account, like it could be like where you just put some money in Coinbase stock or something else, right? Or like indices. That's also like the main way to do it.
Kind of like hedging stuff. And like if you go to these platforms, it's almost like too easy to sell. So if you're having a bad day, then you're going to sell your positions, and then Bitcoin might like surprisingly go up again. And it's pretty hard, but the cold storage solution has been pretty good so far. So kind of like hedging yourself and your positions in a way. But hey, we have been talking for 45 minutes now, so it's been you had interesting views, and we can maybe continue some other time, and maybe you'll have some like new models to show us. And
I guess there might be at least updates, so we perhaps see like when we start to have more upside in the activity levels.
Yes.
Probably later in summer, for instance. Then we can look into
Yeah.
again if there's something happening in the
Yeah,
start.
like closer to the correction, for example.
Yeah, like when the correction is like starting, or if it starts or something happens. That could
Yes.
be like interesting, like also like to your viewers, I guess, that when if we start to see bottoming the market, when people should start buying, that would be probably the more
Absolutely.
interesting time to look it again.
Yes. Yeah. Of course. Yeah. Yeah. You're welcome,
Yeah,
John.
yeah, and of course they can always follow me in the Twitter or X, yeah,
Yeah. I
and
will add
see,
your I will add
yeah,
your X link to the show notes.
yeah,
So
yeah, sure.
yeah.
And
Okay.
then there I also like update the news quite regularly, but not so much the liquidity things, but the news is always interesting because you
Yeah.
always see in X particularly that everyone is super bullish, and then it's kind of like interesting to have a little bit different takes to the market.
Yeah. 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 Let's have a like new like market perspective, and then yeah, later in spring. Yeah, that's a great
Yeah,
idea.
like summer or something like that. Then we probably start to see some trend forming, I guess. Like if we are not just like showing around, let's say 90 and 100K.
Yeah, yeah, yeah. That's right. Yeah. Okay, but thanks for joining, and don't forget to check out partner Quarnex, and I will add Juhani's links to the show notes, and it was a pleasure to have you here, and welcome back again.
Yeah,
Juhani.
thanks a lot.
Thanks, guys.
Bye.
Bye.
Bye.